Now, I was thinking this last, I always start thinking about what I'm going to talk about Monday morning on the weekend. Usually Friday, I start thinking about it. And I looked at it last night. And I was like, man, earnings season is approaching. Can we use earnings with credit spreads? Can we put the winds of strong earnings at our back, effectively giving ourselves even more reason for the stock to move our way by using a ranker called earnings growth? You can find this kind of information online for free. We do have it in Tom's tools. And I wanted to talk to you about earnings today. You know, in the earnings group, we use earnings as a catalyst for IV rush. We use straddles, we use calls and puts. It's a very elegant, sexy way to trade IV rush. We can also use earnings to get some directional probability based on how good those earnings are. Every quarter, publicly listed companies that are trading on the market must announce earnings every quarter. Usually that starts in January and every 3 months later, but earnings happen every month throughout the year, concentrated on January, end of January, February, and every 3 months after that is when the sweet spot, the prime time earnings occur. Most companies announce on a calendar quarter basis. Now, earnings, as you probably know by now, is the #1 influencer for stock price movement. Good earnings drive a stock up. Bad earnings drive a stock down. When a lot of companies have great earnings, that drives the entire market up, and vice versa. So one thing we got to keep an eye on going into the balance of the year is if with these interest rate hikes and inflation over the last couple of years now start to take hold and take a bite out of earnings, that could drop the entire stock market. So earnings is really critical. It's pretty easy to understand, and the relationships are fairly straightforward. And we can use earnings as a catalyst and help us make money. Now, companies that exceed expectations generally rise, and vice versa. And consistent earnings beats, meaning that they beat expectations quarter by quarter by quarter. If that happens, then you've got a really strong wind behind the back of your stock. So what I'm going to look for now is, let's find stocks that are in a bullish posture, that have had earnings beats, a series of beating estimates time after time after time. The idea is if they've done that, let's say 8 times in a row, 8 quarters in a row, 2 years, then the next one is likely to be the same. So that's the general idea. So maximizing directional wins. Now you can go right to this ranker I'm about to show you, but you can also use annual high-low. We've talked about this in a prior Sniper's call. We could use dividend growth. We could use percent change. Find a stock that's moving bullishly in some way. We're going to use high-low here in a minute, but there's others. And then once you have that list, then feed it through the earnings ranker to see which of the stocks that, for example, in this case, are setting a new high, have had the most earnings beats over the last 2 years. And then with that, we might get 1 or 2 stocks. That's all we want. 1 or 2 stocks coming out of this process, and then we go out and snipe some short-term profits. Okay, so here's one way to do it. So I'm going to do this here. Okay, so I'm going to do 2 scans, 3 scans actually, to find the trade. First scan is find a directional reason, find a directional reason for the stock to be rising or dropping. So we're going to use annual high-low. You can use others. I'll point them out in a minute. And then we're going to take the result of that scan and feed it into earnings and find, of the ones that are setting a new high in our case, which of them also have had consistent earnings beats. They beat expectations, and they really announced great earnings over the last year, 2 years. And then from there, we're going to get our stocks, and then we'll go looking for credit spreads. So I've got some slides here to walk you through the process. This is a review. We've done high-low before, but what you want to do in Tom's tools is you go into high-low, select your bullish or bearish bias. We're going to go for bulls today. Select penny plus weekly, hit search, take the results of that search using this little pop-up on the screen, save the top 25 or however many you think are setting very close to annual highs. I typically go 99% or higher within a hair of an annual high, whatever that number is, and then select My Stock List, and then click Replace. Once you've done those steps, then you've got a list of stocks that are setting new highs, annual highs. All right, then what you do with that list, that My Stock List, that's key. You take My Stock List, and then you feed it in to the earnings ranker right there. And here you can look for bullish or bearish. You can look for most actual earnings above estimates, and then vice versa. So if you're looking for a bullish reason for the stock to rise, of course, you would look for most actual earnings above estimated earnings. And then you hit search. Again, you can go bearish. You can do this whole thing over again and go bearish. Maybe we'll do that this morning, depending on what happens here. All right, and then when you get this report, you get all the stocks and the symbols and all the charts and picks and all that stuff. Earnings dates, previous post earnings. This is the main column we're interested in. Here, you can see on this list of stocks that are setting annual highs, we've got these 4 stocks that over the last 8 earnings periods beat. So each and every one of the last 8 earnings periods for these 4 stocks, each and every time they bested what was expected. So what do you think the chances of these stocks doing that coming up to this earnings season are? And believe me, other people know this. Other people are looking at earnings as a reason to buy stocks. All right. So, and then one last thing. So here I'm selecting the top 4 because the 5th one, they had 8 earnings, and over the last 8, only 7, they beat earnings expectations. Only 1 below. So let's just take the cream of the crop. In this case, you would say save the top 4 into My Stock List, click Replace, and then you're right back. Now you're at the point where you can take those 4 stocks and go after credit spreads or any directional system for that matter. Okay, before I get into the software and we're going to go hunting here. Let's see what anybody has to say here. Okay. Come on. Jeff, good to have you in this group, brother. Glad Ebix was a nice winner, early exit. Leo saying USO twice, 2 times a winner. And you're once, twice, 3 times a lady. I don't know why I thought of that. Once, twice, a winner on USO. Phil said I closed 5 sniper wins on Friday. Apple, McDonald's, Gold, Snow, and VLO. Go Phil, go Phil. April so far, 10 for 10, following the principles. April trade length is 6 days. The market is on. We're on, baby. Let's see what's up. I'm going to take a quick look. While we're doing this, I'm going to do this scan in a second, but let's do the top 10s here, and let's look for top 10% gains. All right. Now, these are lists where I didn't think or swim. I always get. I can feel my excitement rising as soon as I start doing this. So I'll try to keep my pace down. All right, there's no real big gains in NASDAQ. Looking at percent change, just looking for sniper candidates. Let's look for the top 10 on the New York Stock Exchange. Nothing, honey, pennies. Let's look for the top 10 losses on the NASDAQ. And there's some here. Let's take a quick look here. The biggest dollar loss, let's do percent change, sorting by percent change. This one here, down 12. Oh, there's some here. Let's take a quick look. Okay, that one's down a bit. So it's at 5. I might sell at 5. That could be an interesting one. Let's look at Viavi Solutions. Boom. Those are the kind of ones, the stocks that we can come in and swoop some sniper profits. Like right now, let's take a look at the options first before we even dig into the news. We could maybe do something on Friday. Yeah, but look here, everybody see the slippage? Gargantuan, not tradable. In fact, it's probably a good idea to keep your eyes here and not get too excited. That was a great chart, but there's no, the slippage is gargantuan. Here, gargantuan, 55 by $5. Are you serious? You're trying to keep us from trading? Yeah, that's what they're doing. Coin, coin's got some, coin has got some nice tight slippage, but I don't see the stock doing much. It's down a little bit, but not doing much. If I did anything with this, it would probably be an iron condor. Sell a credit spread at 90, maybe one at 50. Also, if you do that, make sure you look at Bitcoin and see what, I didn't do that this morning. Let's take a quick side look, /BTC. These are Bitcoin futures. Bitcoin's down today, and that's probably why Coinbase is as well. Okay, what else do we have here? Coin and nitrous. Let's see. That's a good one. I think I checked the slip. That's the slippage I already checked. All right, let's look at the top 10 losses on the NASDAQ or New York Stock Exchange. Top 10% losses. And this first one on SAI, no optional instruments. It's a good idea to have the trade grid up here when you're doing this. NIR, down 17%, no options. Don't even tease yourself by looking at the chart unless the slippage is tight enough. Here, it's still 50% wide. Not good. Now that could flatten. But man, that is a really nice bearish chart, a gap down. Why? Well, earnings. The earnings right there. Earnings happened on 4/17, which is this morning, looks like. So that happened this morning. Let's see how bad it is. Lower fee revenue. This is MW State Street Corporation, trading lower after company reported worse than expected Q1 sales results. Down pre-bell. I just want to see if they've done anything about their future expectations. If we see them lowering their future expectations, that's a nice anchor around the stock's neck. And I'll have to dig in to see. So you can see here they missed their 1.64 estimate sales. They missed on sales only slightly. States with financial. If anybody wants to dig in there, I don't want to waste too much time. We could maybe come back on this. What I'm looking for is them lowering their future expectations. That's the piece of news I like to see. And I'm not seeing it without digging further in, but that's a potential trade on this one. You got to make sure that you feel confident the slippage will tighten, and it's pretty wide here. So I can go out to the next month, maybe see there if the slippage is any. You see the slippage is pretty nasty. It's 20% across the board. I don't know this stock too well, so I don't know that the slippage will tighten. So I'm not too excited about that one. All right, now let's do some scanning. I got to show you my slide. I spent a lot of time on slides, so let me give you this slide first. Okay, so you saw this slide last week. This is one I like to use. If you're selling credit spreads, which we tend to do here, and there's every reason to keep doing it, is when you find a bullish opportunity, also, regardless of how you find it, also couple with it high volume break above resistance. That's a good place at which to sell. Look for some good news and then sell a put credit spread at a support level as far beneath the stock as possible and net about 1% of potential ROI per day in the trade. We'll demonstrate all of that here in a minute. Now, bears, high volume breakdown. Again, look for a bearish reason the stock's dropped. Ideally, it's dropped below a support level on high volume, coupled with some bad news. Perfect opportunity to sell a bear call spread at a resistance level above where the stock happens to be trading. So that's what we're going to do right now. Let's go searching. Let's go dig into the software. I'm going to start by going to stock rankers. Stock analysis, and go after high lows. You can do this any number of ways. Get our back test date correct. Now, of course, we don't have any data for today yet. That will happen in 24 minutes. Let's go after penny plus weekly. You could also go after all optionables here. You can get as creative as you want. All optional stocks and indices is another thing you can go after. Of course, you got to check the slippage before you get in. So let's just go after the whole universe. And we come down here. Wow. Wow, 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 wow. Look at these. All of these stocks from here with this yellow column here. This is where they're at. That means this builder's first source is at an annual high. If that's 100, that's an annual high. Scrolling all the way down here, 42 stocks on Friday hit an annual high. That's a lot. And then underneath, several are within a hair of that. So what I like to do is maybe grab, in this case, somewhere around 98, 99%. I'd say easily we could grab the first 100 of these stocks. We don't need a lot. We're only after one. And we'll save the top 100, all within either at an annual high or very close to it. We'll save those in our holder list called My Stock List. All right, now you can take this list and do anything with it. You can wash the data over and over again using different scanners. All of these most of these scanners have been talked about, and we do have education on all of them in the snipers on the snipers board. Okay, so under stock rankers now, notice here we have earnings rankings. So we're going to be looking for, of the stocks in my stock list, there it is. I'm looking for those stocks that have had the most actual earnings above estimated earnings. These are bulls. Can we get the directional wins of consecutive earnings beats at our backs? Maybe. Let's see. And here, look, this top 12 here. I'm not even seeing Oracle is not in this list, but you got all of these stocks here. All of them are within within a hair of an annual high, and all of them have had 8 out of 8 earnings beats. They've beat estimates 8 consecutive periods, 2 years, 8 quarters, 2 years, beat, beat, beat. Now you can look at some of the stock charts if you like. Look at Crocs. I'm a little surprised. That is some. I think there's some ugly shoes. I've never had any Crocs. Let's look at FICO. Yeah, so we'll do some. We don't have to do any technical analysis just yet, but we can. Look at this one, Manhattan Associates, right at 155, in a nice bullish posture. So we don't have to look at individual charts. Let's let the scanner do the work. So I'm going to save the top 12 then. The 13th one on AZO, they've had 7 out of 8, which is still good, but all of these here, 12 above, have 8 out of 8. We want the directional wins of very strong earnings performance at our backs. So now I have a refined list. I'm down to 12 stocks now. I'll go to searchers, single strategy, put credit spread, highest probability of profit. When you go into this ranker, make sure you want to sort by this one. This is the one I like. Default parameters, short-term credit spread. Go after my stock list. Hit search, and there are none. All right, there just aren't any. So what do? We keep searching. So I'll go back into the ranker. Let's start over again. I'm going to do the same thing as before. I'm going to bring my list down to penny plus weekly, tighten it up a bit. The thing about the all optional stocks list is that it's over 3,000, and sometimes the scanner won't go through all of those 3,000. All right, so now we're down to, there's McDonald's. Some good ones. Let's take the top 25 of these. Let's take the top 25. Chipotle, my favorite fast food restaurants, in there. 25 into my stock list. And then I go to stocks, stock rankers, earnings rankers. Let's hide that. I want my stock list. Search. Which of these have 8 for 8? The top 4 here do. All right, you see that? 8. This one here, the 5th one down, only 7. Let's take this top 4 of these. Save them in my stock list. And then we'll go back to, again, I'm just repeating it. Go back into put credit spreads, washing the data, refining the data, adding more probability with every washing my stock list. These are 4 stocks now. Let's see what's come up. Oracle, my alma mater. I spent 7 years there as a sales rep, and they are a great company. And the stock is proving it. And earnings have been beaten 8 out of 8 quarters. Earnings isn't coming up until 59 days. They have a really off quarter. I think May is the end of their year. I know that because that was a date that I was always trying to make my number by when I was a sales rep for this company. So this is good. This could be a nice little place for us to sell a credit spread. Let's see the 2 that it's given us. Both of them, one's a May 5 trade, and the other, which is a 21-day trade, the other is a 28-day trade. Again, these were given as of Friday's data. It's not going to be live. So what we can do now is go into a live view of Oracle. And the other thing about Oracle is it's also in the tech sector. Another reason for it to go up. So all of that makes me feel really good about putting on a trade on Oracle. So what I just did was I changed the spread type or the option chain type to vertical, so I can get a look at what kind of credit I can get at different price points. What price point? Oh, I don't know. Let's see. Let's find support. I would love to sell at 90, or we wouldn't. Hell, I'd love to sell at 78. We're not going to get any money for that. How close must we get to sell to make some money? 90 would be ideal. Why? Resistance, 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 resistance. That's now support, became support here. 90 is support. That's why. I'd like to sell there if there's anything there. Don't know if there is. How do I find out? I can look at the live pricing here. Now, this is a 4-day trade. Sometimes you can get some credit for 4-day. See there? Selling the 90, buying the 89 puts, 0. In fact, you'd have to lift it all the way up to maybe 93 and get only 4-cent credit on 46 cents of risk is 8-9%. So that's okay for a 4-day trade. So you could do it, but you got to step up. You got to step up to the heat. So sometimes though, if the IV is high enough in the morning, you can see some nice credit in the front month or the front expiration. So going back to 11 days, let's see. If I sold 90, I'd only get 4 cents. Now that's $1 of risk. So that would be 4 cents